first ever profit for streaming. Is this the like Rich Greenfield slow clap, or are you not so overwhelmed by that news?
When you see subscriber growth slow effectively to a halt, and the price has gone up pretty dramatically, it's pretty clear. I guess in many ways it's sort of this, hey, we don't know how to get more subscriber growth, so we'll raise the price and hope that people won't, and we'll even cut back on programming. There's obviously a lot less programming. Disney's essentially going to rely on their movies to drive the streaming service and hope that the movies are strong enough when they flow to the streaming service that people don't cancel, because they're not expecting a lot of growth in subscribers over the next few quarters. And so it's basically trying to, get to profitability, drive profitability of the existing base. But it doesn't really seem like there's a tremendous growth story here. And I think that's sort of, look, everyone's focused on the parks. I don't think anyone's really focused on Disney Plus at the moment. The streaming is a nice data point. I think it's less about getting to profitability and like, how big a business can this actually be, Ed? Like, can this be a multi-billion-dollar free cash flow generating business the way Netflix, or is this, going to essentially tread water, at a low single-digit margin? I think that's what investors are really going to focus on over time.
I mean, you and I have discussed in the past, right, achieving profitability by cutting cost out of the equation. So let's bring it back to Hulu.
What you really want to see is people. You really want to see people who are so passionate. They love this service. They're willing to pay more because they're spending so much time. Like, you want to see consumer love. And based on that love, you can keep raising the price, getting more people to subscribe because there's great buzz and word of mouth. That's not what's happening here, nor any of these other streaming services. So
then let's talk about Hulu. I just finished Star Wars Acolyte on Disney Plus, and like everyone else, I loved The Bear on Hulu. We did the reporting on the negotiations for that, the remainder of Comcast's stake. Is it important, if the idea is to achieve volume and get stuff that people want to watch, do you see Hulu as being sort of something that needs to be resolved as part of that?
I mean, Hulu is going to be resolved. We're just talking about the number now. And I think investors are, expecting several $1 billion, whether it's 4 to 5, we'll obviously see. But I don't think this is, I think obviously Comcast would love more, Disney would love less, but I don't think investors are stressing over what this number ultimately is. Investors are just surprised that the option was exercised last October. I think it's sort of crazy that we're still talking about this not resolved here in August.
Rich, if you could ask one thing of Bob Iger or give one piece of advice to him to fix this in a way that you think would be positive, what would that be?
Look, I think the bottom line is, if Disney is really serious about being a long-term, and you heard Hugh saying they're going to be, in the clip you played earlier, if they want to be a long-term winner in the streaming game, it's not about discounting through bundling. It's not about cutting back on marketing. What they really need to do is invest very aggressively. Stop playing this near-term Wall Street game of trying to get earnings growth. They need to invest aggressively in making great content all the time that gets consumers to engage with the Disney streaming platforms every single day for hours a day. Like, that should be their North Star, versus trying to figure out alternative ways to manage churn. That's what we'd like to see. And look, you've got all of these theme park concerns that are sitting with the company right now. Like, that's what investors are really worried about, is how did the theme park slow down this fast in the span of just the last few months, when Disney historically has pretty good visibility?
Rich, I want to get some time to talk about another name, Reddit. We had Jen Wong, COO, on the show earlier. Very sort of patient, sanguine, calm about the ad environment, but sees a lot of opportunity in sports. I know that you like that name a lot.
We do. I mean, if you think about what Reddit is, they really understand what consumers are interested in. And they've got one of the biggest companies in the entire world, Alphabet, Google, is in their corner. You can't do a Google search and not see Reddit results rising higher and higher and higher. Google's paying them for AI. Like, Google is a firm believer in Reddit. If Google believes in Reddit, everyone watching this show and investing should believe in Reddit. Like, I think that is a really important data point, is that there is this increasing visibility Reddit's getting within Google. And Jen Wang, who is now building out an ad business, Reddit was very slow to get going. They've got it going now. And we've seen other companies, whether it's Snap, Pinterest, go back, X, which used to be Twitter, when those companies crossed $1 billion, getting from 1 to 3 can happen very, very rapidly. And especially at Reddit, where they really know who you are. They don't need third-party cookies or data. They know exactly who Ed and Rich are. They have all of this interest data because you are searching Reddit for a topic, whether it's the Giants or whether it's video games. Like, they really know who you are, and it allows for really well-targeted advertising. I think Reddit is a must-own stock. We just put a buy on it with an $84 price target. I know people are worried about the lockup ending on Friday. It is a great opportunity. People are going to regret not buying it today.